What's up, guys? Marcus and I are going to be talking about auto haulers today and what it takes to get set up. So we're mainly going to be touching on things pertaining to insurance, but a lot of this information is going to help you with getting started in general, whether it's getting your DOT and MC number if you're crossing state lines, or how to fill out your MCS 150 and what to check off when hauling autos. But we're just going to touch base on a lot of different topics and also give you some examples and some numbers on what it costs per the type of equipment you decide to purchase.
And then we also have some questions that you need to ask yourself to help you better classify yourself on what you're going to be doing. Who are you going to be hauling for? Do you plan on hauling for a private entity just for them? Do you plan on hauling from auctions to dealerships, from dealerships to auctions, hauling wholesale cars, high-end cars? There's a whole bunch of different scenarios that would help determine what kind of operation you're going to be running. You also got to ask yourself, how far are you going to be going? What states you're going to be operating in? What kind of equipment do you need to, fulfill that contract? Also, what kind of insurance do you need to be able to run under those specific contracts? So we're going to go ahead and get into that with you guys, and yeah,
we'll go from there.
Alright, so in this first section of the video, we're going to talk about who you guys are going to be hauling for, what kind of business you're going to have, whether it'll be a common carrier or a contract carrier. If you're hauling for an independent business, their cargo, and you're just hauling it back and forth, that's classified different as if you're going out and hauling for a bunch of different auctions to dealerships or a bunch of different dealerships, and you're just getting the contracts that you can. So you want to fill us in on the difference between a common carrier and a contract carrier?
Yeah. So like the difference in the contract carrier and the common carrier is so pretty much if you're a contract carrier, you have a written agreement of some sort that you sign most likely between you and one dealership or a group of dealerships or maybe multiple different dealerships, but you have a contract in writing, and usually that contract outlines what you have to do for them, like you're going to haul X amount of loads during X period of time, or like what their expectations are for you. And then also they're going to give you like a sample certificate of insurance that's going to show you the limits that are required by them to be able to haul for them, and you're going to have to provide that certificate of insurance from someone like us so that you're able to begin to haul with them. So that's a contract carrier. Now, if you have a contract, sometimes you'll get lower rates because your exposure has been reduced because you're hauling for the same people, usually around the same routes every single week. So you're not so volatile of where you're going or the routes you'll be taking, weather conditions, things like that. So all these things are come into place with underwriting whenever you get set up. So if you're a common carrier, that means that you don't have a contract with anyone. You may have an agreement, or you may have a buddy that has a contract with a dealership or something, and you pick up loads every now and then with them. Or say that there's 4 or 5 dealerships that you haul for quite often. They call you, or they notify you, let you know that they need loads hauled, but there's no written agreement, no guarantee there. You're just a common carrier. Now, rates can be a little higher sometimes because sometimes you're going on different routes day over day or week over week, and the consistency isn't always there. You're hauling for different people, so there's different relationships you may have. They may have different requirements. So as far as insurance goes, if you're a contract carrier, from inception of that relationship, most likely you're going to know what that dealership or auction requires you to have insurance-wise from the beginning, and it usually doesn't change unless their policy changes. But when it comes to dealership you may be hauling for, when it comes to being a common carrier, you may have to give us a call, or someone like us, an agent, and change your coverages, either up limits, maybe reduce limits, add additional insureds if a dealership or auction is requiring themselves to be listed as additional insured on your policy since you're transporting their goods. That allows it so that if you do have an accident or something happen, they can reach out to the carrier directly and file the claim for their cargo instead of having to reach out to you and have you do it. So that's pretty much the difference in the contract and common carrier, specifically with auto hauling.
Alright guys, so in this section of the video we're going to talk about different coverages and equipment. that you'll be using in your business. Whether you buy a new truck, a used truck, they're both going to require different coverages.
Yeah, and what Marcus means by that is the different types of coverages are, say you buy an old truck, used trailer, and you pay cash for it. Most likely you're only going to need liability and cargo coverage to get started. You're not going to need common collision or physical damage is what it's called in the commercial world. But
it's smart to have. It is smart to have.
Yeah, it's a good coverage if you can afford it, and especially if there's a loan or any type of lien on the equipment, you have to have it. The bank that finance it's going to require to be listed as an additional insured or loss payee on your policy, so that if anything happens to that equipment, they get their money back. So. But yeah, it is a good coverage to opt to have if possible, but if you're trying to get into this as cheap as possible and you have some cash set aside to get started, it's not a bad idea to try to pay cash for your equipment so that you can not have to get as many different types of coverages in the very beginning. Alright guys, so the last thing that I want to speak on regarding coverages is the industry standard coverages that you're going to have to get started. So as far as auto liability goes, since you're going to be hauling autos, the FMCSA is going to require you to have $1 million for your auto liability limit. And the way that happens is whenever you're setting everything up for your authority and you're filling out your MCS 150, you're going to select autos for the types of commodities you're going to be hauling. So once you select that, the FMCSA, the Federal Motor Carrier Safety Administration, is going to immediately require your insurance carrier to submit $1 million auto liability limits. So that covers your auto liability, and then the other piece is your cargo. So the cargo industry standard for most commodities is $100,000. That's going to get you by with maybe cheaper cars, maybe some buy here, pay here cars, or cars that are going to the auction. But if you're getting into any new cars or higher end cars, you're going to have higher limits. Most of the time, you're going to see guys with $250,000 limits, and if they have a contract, they may have higher limits than that. So that's your industry standard and kind of how the limits are going to look for you. Alright guys, so we're going to give you a couple examples of what it's going to cost price-wise for insurance for the different types of equipment. The first one we're going to show you is a hotshot setup with you purchasing the truck and trailer and only needing liability and cargo coverage. And these rates are going to be in North Carolina based off of clean MVRs, clean motor vehicle reports. So these are just some baseline numbers so you get an idea of what it's going to cost.
With no physical damage option, your coverages are $1 million of auto liability, $100,000 of cargo coverage. The total annual cost is $14,000. The total down payment is around $2,360, and the monthly payment is around $1,165.
The next setup we're going to show you is a hotshot setup as well, but with you purchasing new or like new equipment and having it financed. So it's going to require you to have physical damage coverage. The truck's probably going to be 50 or 60 grand. I'd say the trailer would be anywhere from 5 to 10 grand for that hotshot setup, and we'll give you numbers for that as well.
With physical damage option, which means that you either have equipment that's financed or you have newer equipment that you would like coverage on, and the coverages for this is $1 million of auto liability, $100,000 of cargo, $60,000 of physical damage coverage on a 2020 Ram 2500, $15,000 of physical damage coverage on a 2020 Kaufman 3-car wedge, bringing the total annual cost to around $22,000, which would make your down payment around $3,670 and your monthly payment around $1,820.
The third example quote we're going to show you is a big rig setup. So you having a tractor and probably a double-decker trailer for hauling autos, and we're going to show you examples of what it costs for liability and cargo for that type of setup in North Carolina with a clean MVR.
Tractor trailer option with no physical damage. The coverages are $1 million of auto liability, $100,000 of cargo coverage, bringing your total annual cost to around $19,800, which would make your down payment around $3,330 and your monthly payment around $1,650.
The final example quote we're going to show you is a big rig setup, tractor and trailer, but financing new or like new equipment, and so you're able to see the cost difference in the physical damage, common collision costs you're going to incur because that equipment's financed.
Here is your tractor trailer setup with physical damage, which means that you have financed equipment or you have more expensive equipment that needs coverage on it. The coverages are $1 million of auto liability, $100,000 of cargo coverage, $85,000 of physical damage coverage on a 2020 Freightliner, and $40,000 of physical damage coverage on a 2020 Wilson trailer, bringing your total annual cost to around $27,200, your down payment to around $4,560, and your monthly payment to $2,260. And again, guys, these are just example quotes based out of North Carolina with clean scores and clean MVRs.
All right, so that pretty much wraps it up for auto hauling. If you have more like specific questions on how to do something more specific, we're gonna post our info in the link below, as well as some like resources and everything. But this is just a general rundown. It's going to get more in depth than this. There are things you got to fill out and do, such as that matter. But we're also going to put our contact information below as well. So if you do need help, which states?
Yeah, the states we're in. Yeah, so if you're in the states of Pennsylvania, Virginia, North Carolina, South Carolina, Georgia, Tennessee, or Texas, we're licensed in those states, and we'd be happy to provide quotes for you. Whether it's you're just getting started and you need new business quotes, or you've been in business and you're renewing, we can also give you numbers for that as well. So yeah, like Marcus said, reach out to us if you have any additional questions or if there's something specific we could help with. And yeah, please like and subscribe so you can get more content like this coming in the future.
All right, thank you guys.
Thank you guys. Catch you next time.